Welcome back to another Ticks and Trades daily recap for Monday, January 27, 2025. I'm Sam Morton. You are looking at a daily chart of the SPY, also known as the Spiders, which is an ETF that tracks the S&P 500 index. So we got the drop we were looking for last week. They gapped lower at the open, about 130 S&P points this morning. We'll come back to this daily chart later. This is the email with a game plan and levels for the day that was sent out before the opening bell. The zone at the top of the board was the only place that had significance for today's trades. The spiders mostly hung out around this zone all day. And this is what that looks like. Right after the open, price shot up, hit this zone, stalled out. And I'll tell you about my trade in a moment. But first, let's talk about what you would have done or could have done with this zone up here, or if you had the levels from this morning. We'll zoom in to this area here. So after the 15-minute window was open, the SPY was right on the top of this zone after bouncing around it and kind of above it for a while. And 1 minute prior, they had bounced off of the lower extreme of this zone. Essentially, price was above the zone at that 15-minute window. And the right thing to do would to be get into a long position in the E-mini futures at the market, basically buy at the market right at 9:45 a.m. And doing that would have handed over a base hit of 4 points at a minimum as price went higher from there. For the purposes of our playing by the rules tracking log, we'll say that you bought at just this top level after 9:45 for that long position. So one base hit. Not until price got under this zone right here would you have started looking for a reason to trade that zone again, this time on the short side. It's what I call a recycle trade. Enough time had elapsed here, so one long trade and the level's done for the day. For any future long trades, I've mentioned this before, but I'll say it again. You'll often get more than one bounce at a level. So multiple trades at the same level will sometimes work. But when I'm strictly trading according to my strategy, I won't attempt a level more than once on the same side. So this recycle trade we're talking about here would have been a short trade about 11:47 a.m. when they came up underneath it. So selling short here at about 11:47 would have put you in a short position by averaging in across both of these levels. You would have sold here and you would have sold again. They kept going higher, but holding on to this, your combined position would have easily handed you a base hit with just a little bit of patience. Every zone that is traded and tracked by this playing by the rules tracking log treats each level independently in a zone. And since the levels are often relatively close together in zones, usually what happens is you average in across the two levels. So your short position of these two levels handed over a quick base hit on that combined position. So now this zone is off the table for both sides of the tape. No long trades, no more short trades. So 3 official base hits per the rules. That's the 1 there and the 2 here. So I'm not exactly proud of what I did, but I'll tell you about it now and then I'll show it to you. So early on, right after the opening bell, when I saw price messing around this zone, I jumped the gun and went short thinking that price was going to get rejected here and fall down more, and I wanted to be along for the ride. Down. My 2 contract position got out of the money because they went higher, because I didn't wait till after 9:45 and then read the room and know that being on the long side was the plan for at least the first 20, 30 minutes or so. I was looking at longer term things on my other analysis charts, and there was a trend line I saw developing. I thought I wouldn't be too surprised to see price spike that trend line, trying to make it look like the bulls were in charge. And then about that same time, the bears would take over and price would get pushed down to where I wanted to take a profit, which was about 15 points below where I entered the trade. So you'll see me go short almost immediately here. And basically, I held on all day. I kind of stubbornly did not take profit when 10 points or so was handed over a few times. There were some things happening on some longer time frame charts that I was interpreting as bearish, that if price would get down to 595.72, they probably would fall a lot if they could get below this and go down. But the bulls kind of defended it pretty well. Price kept hitting support right above this level several times and wouldn't go any lower. So this is sped up a lot. But since it lasts all day, I'll scrub ahead and show you where I'm at now. I'm still in this trade, by the way. There were several opportunities for me to get out with maybe 8 or 10 points or so and just be done with it. But for whatever reason, I didn't budge. So now I'm still in this trade, even after the closing bell. I might regret not jumping out earlier or even like right now. But looking over everything else, I think that lower prices are coming. The problem is we have that FOMC announcement on Wednesday, so that could affect trades. Tomorrow might be slow. If I'm still in this thing during the regular session tomorrow, it'll probably keep me from getting into new trades in the E-minis. So maybe I'll trade some micros or something, some micro E-minis. In that case, we'll see. And when I get to the end of this, I'll let it go even after the closing bell. So here's 5 o'clock or so. And I'll show you where I'm at right now. This is current time. And you'll also notice that I moved up my profit objective to a more reasonable 5 points. So I'll keep an eye on this. So back on the daily chart, while they did manage to regain some lost points today, the bulls still have some work to do to climb back up higher. I think where price happens to be leading up to the FOMC announcement won't be a coincidence. Price almost always seems to find itself on a precipice on those days, and decisions need to be made about the direction of the next near-term trend. I said earlier that it's my opinion that there are more lower prices to come. I can't quite point to one thing and say that is why I think that, but I just don't think you could ignore a fall of 130 some odd points when there was nothing really to predict that other than the fact that price had risen pretty much straight up a certain amount of time before spiking the former all-time highs. And this overnight drop probably has something to do with where the institutional traders want price to be when the FOMC news drops. So something tells me the bears are not finished. Nothing really to say with confidence, but that's how I feel about it. When you zoom in and look at a smaller time frame like this 15-minute chart, you can see the makings of a bear flag kind of pattern that would usually play out to the downside, kind of like this. So this whole thing is a drop, kind of going sideways for a while, they're going to drop again. But they have a lot of space up here that they could go up, and this whole thing is still intact. But there's a lot of places that they're going to have to fight to get through. The bulls have their job cut out for them. And also don't forget how extended the SPY is on the monthly chart. Here's a quick look at the monthly chart. A reset isn't out of the realm of possibility. Here are the tracking logs. The first one is the playing by the rules log. You can read the notes. You can see the 3 base hits on that zone that we already looked at. And you can kind of peruse the other metrics. And for my trades, the Sam's Trades log, I basically say in the trade outcome is pending because I'm still in the trade. I'll keep an eye on it. Probably put a stop limit, do something before tonight, and I'll catch up on this log when whatever happens, happens. So that's what I've got for today. Thanks for watching. There will be new levels tomorrow morning, and we'll do it all over again. I hope you found some value in today's recap. I'll talk to you in tomorrow's recap. Have a great rest of your day.